Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, before 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 21st day of March 2014, and this is the daily report for gold and silver, our weekend review. And what a week we have seen in the market, considering the fact that the 17th was Monday, and back on Sunday, we had gold trading almost at $1,400 an ounce, $1,390 intraday high. We really witnessed a pretty strong round of profit taking as this market took us to an intraday low of about $1,320. Currently, we do have the market trading higher on the day. It really is the first day in which we're seeing higher pricing. Currently trading up about $7-8 on the day, $1335.40. That is, of course, the spot price. The low, $1328.50, and the high, $1344.20. We did issue an aggressive buy signal along with a stop placement yesterday that would have been implemented this morning, of course, or last night, depending on what part of the world you are in. We'll talk about that recommendation. We'll also talk about trade activity during the week, as well as our forecast for next week, all on today's daily report. So before we go into our current trade recommendation and forecast for next week, just wanted to very, very briefly speak about the trade that we did exit this week. If you recall, we did enter a position at roughly 1333. That would be right in this area here. And as that market came up, what we did was continually trail our stops. By the time we hit this particular intraday high of about 1390, we had trailed our stop as tight as 1358. That would be just below this arrow right here. And then as the market came down, it did get us out, knocked us out with a profit. So we got in roughly at 33. We got out at 58. And the profit that we pulled on this trade was really in between these two marks. So we were able to pick up a substantial portion of this move, and that's all I really ever look to do. Now, traders, I have a couple of different models of where I think this market might go next week, but I want to start today's show really by talking about the parameters that led to me issuing a buy signal approximately 12 hours ago, and that was based upon a couple of factors. First of all, it is an aggressive buy signal, and there were a couple things I was looking at, and I kind of want to spend a couple of moments and go through them with you. First, looking at a 60-minute chart, and when we do that, we can see, just as we look at these longer-term resistance lines, I simply created a resistance line that was pegged from these series of tops as the market came down. I realize it's a very, very short-term study. My assumption was that what we would see is that once the market began to find a bottom, there would be two basic things on these short-term charts that would really illustrate that point. Actually, I can think of three, but two primary points that we want to talk about. And the first one is that as the market bottoms, of course, it will break through these series of lower highs as the market came down, forms that resistance line. We get that breakout, and the breakout, of course, is really through this particular line. So that's one of the first things that we look for. The second thing that we look for is basic technical analysis 101, and that is as the market goes down, you get a series of highs and then lower highs. As the market goes down, you get a series of lows and then lower lows, as you can see here. And so the first thing that we look for is at what point do we see the market actually making a higher low than the previous low. So we've got low, low, and low. And so lo and behold, and no pun intended, of course, you get this low right in here. And this low right in here, of course, is above the prior low. But the high is also above the prior high. So if you get a higher high and a higher low after a series of lower highs and lower lows, that's the second thing that will really give you a clue or some indication. Of course, third, we look for basic periods of or areas of support, I should say, and to do that, I basically compressed this chart. When we compress this chart, I had noted that right around 1320 or so, we had these series of support levels, these bottoms. So really what we're looking at, the market comes up, you've got a series of higher highs. Of course, this was a double top, higher high here. But as the market came down, we had an area which was supportive of the market here, was supportive of the market here. Of course, here we see it as a resistance area. Again, support is one man's ceiling, is another man's floor. And then we saw that support here. So that is yet another indicator. So when we put all of those together, meaning breaking above this resistance line, first period in which we're getting a higher high and a higher low, and that matching up with some sort of support area, that gives us a real indication that we could in fact be looking at some sort of a potential bottom or an ending, I should say, to this correction that we witnessed. Now, I draw your attention now to our daily charts because this is why I considered it an aggressive buy signal as opposed to a conservative buy signal. We are looking at a daily chart. This is the continuous contract of COMEX gold. And let me go ahead and kind of bring these candles in a little bit so you can see what I'm looking at. But as this market came down, these are our daily candles. We get this, it's a dark cloud cover right in here. You get the confirmation dark cloud cover and a continuation. But once it comes close to, and I was thinking that the market should probably test about 1340, although the intraday low was 1320, so it was above this 38% retracement level, and this is really where I believe the market could go to. But as it began to fall, we had this doji form in yesterday's market. Again, a doji is a great indicator of a pivot point at particular points in the market, because what it's saying is that neither the bulls nor the bears have absolute control in the market. This, in comparison to, for example, the prior day in which we had a tremendously large range in the market, a tremendous low in the market, and a pretty solid red candle, here you can obviously see that the bears were dominating control in the market. So once we had that doji I look at as a stop sign or a pivot point, a potential turning point for the market. So once we had that doji, that's the point I began to look at some sort of potential. And as soon as that doji became engulfed, meaning that the body of this current trading day, because these are daily candles, has engulfed the entire trading range of the body, not the tail, but the body of the prior range, that's what gives us this engulfing bullish. The fact that it's a small-bodied candle was one thing, but the fact that it came after a doji and appeared to be trading to new higher ground, those were the real indications to me that said we could be looking at a potential bottom, and that is what really prompted this aggressive signal. Now, it is an aggressive signal, and the reason that it's aggressive is as follows. Typically, to take this kind of a call, you would want your confirming candle to definitely, let me see if I can put these in, but definitely be a pretty large-bodied green candle, and that would be followed on the prior day, meaning on next week's trading activity, with a candle that had a higher high and a higher low, something like this. So you would get that real pivot or V point, meaning your downtrend, your doji, and then you get your confirming candles right in here that would be green with higher highs and higher lows. That really would be the conservative signal that you would be looking for. This is jumping the gun in that we're going in a little bit early, and that's why I'm labeling it a very, very aggressive signal, because we haven't really seen these candles form. What prompted the signal and the call itself is many times when we see the market hitting a bottom and right before it begins to take off, we get a series of these dojis. And these dojis, when you see them in alignment like this, meaning large red, star, and then green, you're really getting that three river morning star variation, such as you got right in here, just preceding this. And it is the type of pattern that we look for as long as it comes in confluence, in agreement with other indicators that we followed. And so by going through the different things that I looked at, it should give you a pretty clear indication of what we're looking at. And as I said, at best, it is a high-risk trade. But nonetheless, I wanted you to have our sense of what parameters we looked at when we actually issued that signal. So traders, I mentioned the fact that I have basically two models that I'm currently looking at for this short-term move. I gave you the rationale behind why we issued an aggressive buy signal. Now, when we look at this 9-day chart, and it really slows things down, we can see absolutely our double bottom here. We can see the market trading higher. We can see the size of this candle. This would be now 3 weeks ago, a little bit over 3 weeks ago, but we've had these two dojis over the last candles. These are 9-day candles. And so one model I'm looking at would simply look for this rise here, the correction to still hold and maybe go and test that 13 area and then move up. Or the second way we can look at this model, and therefore the aggressive signal that we issued, but the second way that we can look at this model is we've got the market moving up to this top, very, very small correction already right in here. It's kind of worn itself out, and now we'll go back into a impulse phase or a bullish part of this rally. The other thing that looms large, this again is a daily chart, and you can see this engulfing bullish right in here, but we're looking at the chart in which we have our Andrews Pitchfork. I'll go ahead and compress it before we take the chart off the screen, but there's no question. We identified the fact that for the first time since we've drawn this Andrews Pitchfork that we have actually made it over this zero prong, this outside prong. That's right in here, but lo and behold, the market has gone back into alignment and moved back into this channel. So the question is, at what point will it find some support? My hope is that we won't see it have to track as low as moving back to the 23% channel. Of course, that's 0, 23, 38 before moving back up. And I think that we see some bullish posture. We also, even at looking at this from a brief standpoint, can see that we've got these series of lows right in here. So we could easily see some good support come into the market. As I said, we'll have to see. But it is a little disconcerting that as we broke above this channel for the first time, that would simply be followed, of course, by the market backing off and having a round of profit taking as we are witnessing now. And as I said, let me go ahead and compress this chart for us so you can see the fact that there's been no other time historically since we identified this Andrews Pitchfork. Of course, it comes from 3 data points. These are 3 data points. And the fact that the market did break above it, and it clearly did. It clearly did, and at no other time has it done that. It has also clearly moved back into the channel. So as you know, on last week's weekend review, when I gave my short-term forecast, I was bearish. My interim and longer-term forecast, I was still bullish. How has that changed? Well, short-term, I believe we could see a potential bottom or cessation to this most recent round of profit taking. When we consider that this market has genuinely moved up strongly off of these lows and really added about $200 per ounce in value, there's no doubt we're going to see it correct somewhat. Now, geopolitical uncertainty, that still looms in the air, and that's one of the major factors, I believe, that we saw premium being added and really witness gold genuinely return as a safe haven investment or asset. And so whether we see this market back off a little bit or begin to move up, interim term, I absolutely still believe that we have concluded this major fourth wave, this corrective wave, and that we are either in some sort of a counter trend, which I am starting to believe is less and less likely, because if we are in fact concluding this major fourth, if we've entered an impulse phase, which is what this particular count would necessitate, then there's really no other count that makes sense if we're looking at this as a major fourth and believing in our model that it has concluded. So as I said, we'll have to see how the market reacts, currently trading roughly 1335, 1334 and change. We'll have to see how it reacts. But I believe that whether or not we see a little bit more downside next week, there's going to be a bottom, whether that bottom was reached at 1320, that intraday low this week, or if we need to drift a little lower to maybe 1313, 1310 in that area. I believe at some point very, very soon, we will see a bottom in this market. We will resume to a bullish mode or bullish rallying circumstance. So traders, what about silver? My sense is that we could see silver run a little bit in tandem with gold, in that we have seen the equities markets rebound. There's that industrial component, and we shouldn't see as much pressure. However, silver has been a tough call at best. We did put out a recommendation along with our gold recommendation. Again, it's a very, very aggressive call. Now, traders, I did put out a stop at 20, placing it below 2075. That was a clerical error on my part. It should have been 1975. Market's currently trading at 2029. The market was pretty much in the same area as it was when we released our signals approximately 12 hours ago. But the reason that I believe you want to place it below this area, this is 19, of course, 75, is because I want to place it below this cluster right in here. And you can see that our different levels, this being 1986, so it's just below there, and that will protect you. If this market is genuinely going to take off, it's going to form a base here, it's going to find support here and then move higher. If not, you really don't want to be in this trade for too long and let it run too far against you. And the same goes with gold. These are aggressive signals at best, but we will see how the market unfolds as we go into next week, especially with what's going on in the Ukraine. And we do have a couple of important reports also coming out next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.